Let's describe like the opportunity in Web3, because if we think about Web3 as like a new frontier, a new dimension that's opening up the internet of value, to me that kind of sounds like there's wealth there, there's opportunity for businesses, there's opportunity for investors to come alongside those businesses and get a benefit. How would you describe the opportunity in Web3?
Web3 is really exciting, and like for me, I'm a partner at Hamilton Lock,
Mm.
and I specialize in fintech, Web3 crypto, and venture capital.
Yeah.
Um, and talking about Web3, it's worth looking at Web2, which is where we are now.
Okay.
And in a read-write environment, we can, monetize our photos or videos through Web2 platforms like YouTube or Facebook. But a lot of that value is captured by the platforms.
Mm.
In a read-write own environment, you're still using the internet, but now the interests are a little more aligned between the users, content creators, and the platforms,
Right.
because you can own your digital assets, whether they're video, photo, or your data, and you can own them through tokenization on the blockchain, and you can custody these digital assets on your own blockchain wallet, like
Right.
MetaMask.
So if we were to think about this like almost in the concept of music, right? Like, let's say an artist, you're a creator, you put something out there, you might get signed with a record label, and there's a publisher and there's song rights attached to that IP. But you, as the artist, the creator, you're often not directly connected to it, right? You have to kind of go through all of these structures to get a benefit from that. So in Web3, am I correct in assuming that we kind of ditch all that in between stuff? So we're kind of getting rid of middlemen in the Web3 world. Is that fair?
Yeah, that's definitely fair. And you look at how Web2 has transformed the music industry. The musicians didn't really have a direct relationship with the consumers.
Yeah.
There were still distribution channels to get the product to the consumers.
Yeah.
Whereas you have, firstly, Napster, which was my generation,
Yeah.
and there wasn't a way for artists to monetize their IP through Napster because it was breach of copyright. But then you have platforms, Web2 platforms like Spotify, where now you've got a more direct relationship between the consumer and the artist.
Mm.
Now, Web3 changes that paradigm even further, because now you have the direct relationship with artists and users, but users now have more opportunities to actually capture some of the value that they create by participating in that relationship.
Right.
So you could have a tokenized economy where users who spend 100 hours on the equivalent of Spotify and Web3, they capture some of the value that they spend on that platform by being paid tokens, for
Right.
example.
Okay.
Because consumers see that they can actually capture more value by
Yeah.
participating on the music platform.
Right.
Then there's mass adoption on that platform, and then the whole economy gets more valuable for the platform, for the artists, and the
Okay.
users.
Okay. So now let's just rewind and talk about like who you are a little bit more and like what you do specifically. Because I know you're a lawyer, and I know that you've had some involvement with some Web3 companies. Future versus one of them. We'll come back to that in a minute. But what prompted you to kind of specialize in this particular area of law, and what does it look like in the day of the life?
I got into crypto in 2016. I was an in-house lawyer at the NZX, and I was friends with software developers who would talk about Bitcoin and Ethereum at the time, and I was also working closely with the settlement function of NZX, the clearinghouse. And I realized just how inefficient our clearing and settlement system was
Yeah.
for the NZX markets, where trades were settled on T+3, like 3 days.
Right.
And NZX kind of functions as the middleman, so that if the buyer of a trade can't settle, then NZX will step in and settle the trade so that the seller can actually complete their trade. And then, so there's a lot of middlemen in the process. You've got brokers like Sharesies and ASP securities.
Mm.
And then I saw what was happening on Bitcoin and Ethereum, which was there were no middlemen. It was peer to peer clearing and settlement, and people had control over their own assets.
Mm.
And I realized then that actually this technology is transformative.
Yeah.
I'm going to devote my legal career to this. And so during the ICO boom in 2017,
Yeah.
I, tried to find every opportunity to work on ICO based projects. So I was working at a law firm where we were working with Kim.com on his failed ICO, K.im,
Yeah.
and there were other ICO projects coming around that time. And so in 2017, it was the ICO bull market,
Mm.
and it's kind of like each crypto bull run has themes. So 2017 was about ICOs and which blockchain would be the Ethereum killer.
Mm.
You had things like EOS,
Yeah.
Neo, and IOTA. And then you compare it to 2021, the bull run was about NFTs,
Yeah.
DeFi, and the metaverse.
Mm.
And then my prediction is the next bull run, which will probably be next year, will be more about TradeFi finally accepting crypto with spot ETF, with more crypto regulation and tokenized real world assets.
Okay. All right. Well, let's peel that onion, shall we? And maybe start with real world assets, a way to bridge Web3 and Web2 by putting like a Web3 wrapper around real world assets. Do you want to give us a definition that's hopefully better than that?
I mean, that's pretty good. Yeah, tokenized real world assets. It's anything in the real world, whether it's financial products like shares
Yep.
or units in an ETF, or it could be a building, or it could be even this chair that I'm sitting on. That could be tokenized on the blockchain,
Mhm.
and then you could trade it on the blockchain and create more liquidity for these assets.
So when we say that it's tokenized, can you break that down a little bit more? Because we're not actually properly digitizing the chair, are we? We're creating a digital representation of it in some format so that we can divide up and transfer ownership easily. Is that the idea?
Yeah,
Yeah.
that's exactly it. And going into how we record ownership now, we have centralized forms of ownership recognition, like recognizing the ownership of this piece of property that we're in. It's through LINs.
Yeah.
Ownership of our cars. It's through the
VTNZ, I think it is.
VTNZ.
Yeah.
I was thinking of the DMV.
Yeah, that's right. Or the
yeah.
DMV. Let's go with that one. Yeah.
yeah,
For our US audience. Yeah.
yeah, and hello, US audience. um, and and so you have centralized forms of ownership recognition, but when you use blockchain, you're using distributed ledger technology and cryptography. So the record of ownership is no longer centralized through one organization or person, but it's recorded on a ledger that's looked after by multiple independent computers. And so it takes away counterparty risk, it takes away fraud risk, because now you have like the self-governing system for recording ownership of property, recording transactions.
So like breaking this down is like if there was a whole bunch of people spread across the world and they all had an envelope with the exact same information recording who owned what, it's kind of like that, right? Like there's no disputing it that you own the chair that you're sitting on. But if the ownership changed, the beauty with blockchain is that all of those envelopes, what's inside that recording ownership changes simultaneously, right?
Yeah, that's exactly it. And then when you tokenize real world assets, a crypto token is really just a record of ownership.
Yeah.
If you have a fungible token or a fungible crypto asset like Bitcoin, where one Bitcoin equals every other Bitcoin, then recording that ownership of that is just on the blockchain, or it could be through smart contracts. Whereas if it's an NFT, then it's a record of ownership of something unique, like a unique piece of property. It could be a piece of intellectual property, or it could be a unique piece of real property, like this building.
Obviously, it changes though, right? Like I can understand how with a non-fungible token, effectively it's an image and it's digital already often. And so how can you actually make a digital representation that works in the same way as, say, an NFT of a you know, a smoking monkey or something like that?
It's yeah, that's the hard part, and I'm working with a project, New Zealand project that's building NZX on the blockchain, so to speak. It's
Wow,
creating a marketplace for tokenized real world assets, and the secret sauce there is if you have like regulated forms of ownership recognition, like real property, then we'll have to wrap that up in a special purpose vehicle, like a company or a fund, and then we tokenize the financial products of that SPV on the blockchain. Whereas if you've got a piece of property that doesn't have regulated centralized ownership, like my phone, for example, then I can tokenize that straight onto the blockchain
I
without
see.
without using an SPV.
If it's tokenized, is it
Yeah.
kind of like held on a custodian? That's that part, that interface between like the traditional and the digital that I'm trying to get my head around. Where does that connection occur?
The secret sauce, and it's a great question. The secret sauce with tokenization is you have the opportunity for self custody. Just like you can self custody your Bitcoin on your MetaMask wallet, you could you could self custody your tokenized real world asset on your own wallet. And then you could then tap into DeFi protocols directly using your wallet without having to use a custodian. Like, for example, in TradeFi world, when you advise on financial advice products, you're really dealing with sharesies or ASB securities. Like, they always have custody of those financial products.
Mm.
Whereas with tokenized financial products, then you can have direct custody.
So let's say that we own a share in Apple, and from New Zealand, and I'm sure this is true in many parts of the world, I might use a digital broker like Sharesies or Hatch or Stake, and I'll go on that platform and I'll buy that share of Apple. And I know that that share certificate, if you like, is held on my behalf through a custodian, but in reality, I own a claim on a fund, don't I, that owns all those assets. So it's it's an analog version of what we're talking about here, but we're talking that like that share in this context would be wrapped in a digital token that I would store on my digital wallet, whether it's MetaMask or Exodus or some other digital wallet. Is that correct?
Yeah, that's
Right.
exactly it. You'll have direct custody to that tokenized share or tokenized ETF,
Mm-hmm.
and there's no custodian there. The blockchain will record that you own those tokenized assets in your wallet, and then you can transfer those tokenized assets
Anybody else?
to me,
Yeah.
please,
Yeah.
or transfer it to a DeFi protocol and earn some yield directly, no middlemen.
But how does it work where that wrapping occurs, that digital wrapping?
Yeah, actually, that's a really good question. In New Zealand, for example, we don't have share certificates anymore. Under New Zealand company law, we record ownership of a share through the internal share register of the company, and each company is meant to maintain their share register. So if you're a publicly listed company on NZX, like I don't know, like Air New Zealand, they usually outsource that function to a share registry company like Computershare or Link Market Services. Whereas if you're a private company like Futureverse, for example, they have to maintain their own internal share register. And if you're a shareholder, then you're entitled to a copy of that share register at any time. When you tokenize shares in a private company, then all you need to do is maintain your internal share register and connect it to your digital platform so that if Darcy ever transfers shares in that company to Bryan, then it kind of it updates automatically. And there's technology for that because in that environment, you're looking to work in a platform where you and I are KYC'd when we go in. And so all of our details are held by the platform off chain. But then if we make transfers in this platform using blockchain, then the platform automatically updates the share registry information.
So if we think about that share registry, then that's where I guess the connection occurs, isn't it? Like that's where the share registry is effectively put on the blockchain, and then the currency or the network in which it's moving in has to ensure that the KYC and AML and all the other regulatory bits are satisfied for the direct trading to occur between my wallet and your wallet, right?
Yeah, that's
Right.
exactly it. Like if you look on chain, like on Etherscan, all you'll see is you won't see Darcy's name or Brian's name. All you'll see is just bits of letters and numbers.
Mm.
But if you were on the platform end off chain, you can see Brian has a wallet of 100 Air New Zealand shares, and he's just transferred 50 of those to Darcy.
Yeah.
New Zealand, how we regulate financial products is we look at the instrument, and that's like the bedrock for how the instrument is regulated or how the platform dealing in that instrument is regulated. And so, if you're dealing with a share or a crypto asset or an NFT, the question would be whether that instrument is a financial product.
Right.
And in New Zealand, you have four types of financial products. You have an equity security, which is like a share in a company. You have a debt security, which is a right to be repaid principal and or interest. It could be a managed investment product, which is like
Mm.
a unit in a fund,
Mm.
or a derivative, which is like a contract where its value is determined by the value of an underlying asset,
Mm.
like a gold derivative,
Mm.
gold futures derivative, for example. And so, if you're looking at an NFT, like for me, when I advise my clients and whether they're NFTs or crypto are financial products, I apply those four tests. If they're caught, then I help structure their product so that they're not a financial product.
Right.
Now, if you're dealing with, let's say you're dealing with a financial product, whether it's in TradeFi or whether it's a tokenized financial product,
Mm.
then you could be regulated like Sharesies, which is a broker and custodian. Yeah, you'll be regulated by having, custody requirements. You have to make sure that the your customers' money is held in a New Zealand bank account. You've got to make sure that your client's property that's audited once a year. If you're dealing with financial products kind of like NZX, then you need a license from the Financial Markets Authority to
Mm.
operate that market.
Mhm.
So, for example, if Easy Crypto was ever dealing with financial products,
Mm.
and we can assume they're not, they will be regulated like Sharesies.
Mm.
Whereas if Binance were dealing in financial products, then it would have to get a license, kind of like NZX.
And that license kind of, you would go through those four things. Is it an equity? Is it debt? Is it a managed investment product, or is it a derivative? And then you would trying to figure out what kind of function are they playing in the market, and then that kind of determines the type of regulation that applies to it.
That's exactly it. And a lot of the crypto assets, I mean, theoretically, all of the crypto assets in the market right now are not financial products. So the likes of Binance, CoinSpot, they make sure that all of their crypto assets are not financial products,
Mm.
so that they don't need licensing requirements.
Okay.
They still have to do AML KYC,
Yes.
but yeah, they ideally try and fall outside of TradeFi regulation.
It does open up a lot of opportunities for the I guess the reporting requirements, and I'm thinking in terms of the product disclosure statement, but also the tax reporting potentially for someone who has a wallet and there's cost basis of at least $50,000. So they're subject to the fifth rules here in New Zealand. So I guess if those assets were speaking to the wallet and all of that reporting was all done, then is that kind of an example of how things can be done a lot easier in a decentralized way? Because now these shares themselves speak the information that's required to assemble all the reporting at the end of every year, right?
That's the potential. You wouldn't need to use a share registry in that scenario.
Right.
If there was a dividend, then that would flow directly to your wallet. If there was any kind of reporting given to shareholders, that would flow directly to the wallet.
Yeah.
So there'll be less middlemen in that process.
Yeah.
And then the company, whether they're dealing in TradeFi financial products or tokenized financial products,
Yeah.
it would still have the same accounting processes, I would think.
Yeah.
It's just a lot of the delivery of the reporting would be digitized.
And do you feel like, maybe I'm getting ahead of myself here a little bit, but do you kind of feel like this is going to increase the pace at which these assets move around in a market? Like, again, if we're able to trade shares directly between each other, then what's to say that we don't go out for lunch and then split the bill using Apple shares as currency?
That would be the beauty. And I think you could definitely find more liquidity
Mm,
in when you tokenize financial products. Um, just, yeah, because it's just easier to transact.
yeah,
And I think with more liquidity, you've probably got a more efficient market
yeah,
and better price discovery.
yeah.
Um,
Because things are moving around faster, right? You'd think.
Yeah, that's right. Because yeah, exactly. You're taking away a lot of the frictions in TradeFi, where
Mm,
you've got heaps of middlemen,
mm,
kind of, and because all of their processes are manual,
mm,
involving people, then it takes time to facilitate those transactions. You've got 24/7, 365-day clearing and settlement on the blockchain.
mm,
And I mean, that's probably why Bitcoin, and how crypto markets probably why they behave the way they are, because
mm.
they're 24/7,
Yeah.
365 days. Whereas on NZX, you've got business hours, Monday to Friday.
Yeah. Moving this example out now towards other types of assets, just to really build this picture out a bit more. Let's say it is just a house, a normal house that maybe it's your own home that you live in. What would it look like if we moved to a place where all of the ownership of that house was represented by a bunch of tokens that I held on my own wallet? Like starting from the like even just the how to the technological layer, assuming there's like the land transfer office or there's some sort of repository where all the titles of the property are kept. How do we tokenize the units of ownership in property like this?
You would put that piece of property into a company, and the company could have any number of shares, and you could tokenize each share into one token equals one share, and then you could then have fragmented ownership of that piece of property. If, let's say, my wife and I were happy to sell 30% of our house to you,
Mm,
then we just transfer 30% of those tokenized shares
yeah.
to you.
You could use the value of your home as a form of currency, but it's a non-fungible token though, isn't it? Because that or that would it be a different currency for each specific property? Or how does that work when we think about this in the context of a marketplace where maybe there are multiple properties, like hundreds of thousands of properties now that have been tokenized? It's not a fungible token, is it? Like each token is different because it represents a unit of ownership in a specific property. So what kind of complications does that bring to the table?
I think when we're tokenizing like real property, I suspect we'll be using fungible tokens.
Hmm.
I think the biggest challenge will be setting up the governance of each SPV so that it's not too cumbersome, for example. And you'd have to set out rules in the constitution of that SPV so that if you're a holder of the tokenized shares, then you have equal say as anyone else
Hmm.
holding those tokenized shares. But I think the opportunity there is, yeah, you have more liquid markets. You're using different rails now because you're using blockchain rails, which, as we said, they have 24/7, 365-day settlement. And then now you've got potentially a lot more liquidity
Yeah.
in this property market.
Yes.
And then you could, again, I love talking about DeFi.
Yeah.
You could tap into DeFi markets,
Yeah.
and you could, monetize those tokenized shares in property. And then, yeah, I mean, potentially it would make things more efficient as well, because I would assume the platform would always have to be KYC'd, like a walled garden, so that, the platform operator knows who owns which wallet, which owns the tokenized property. But I think, yeah, you've got more liquidity and more efficient market.
Okay. Thinking about DeFi, decentralized finance right now, borrowing and lending specifically, if I was able to tokenize the ownership of a property, let's say, for example, I see a property I want to buy, I sign up to some sort of service where it essentially pre-tokenizes it maybe by, you pay a fee and it wraps it in an SPV vehicle tentatively until it's known that you've bought the property. And then if you bought the property, the settlement actually comes from a process which involves taking those tokens and putting it into some sort of pool where you raise funding. And I guess what I'm getting at is it possible using decentralized finance to raise funding before the settlement on a real world property? Like, are we going to be able to bypass the banks using something like this? And if so, how would that work?
Yeah, that's the potential. I mean, during the last bull market, the DeFi markets touched the hundreds of billions.
Yeah.
And even now, you have DeFi protocols with hundreds of millions worth of value locked. Um, and I was recently in Sydney attending a crypto conference, and I was talking to some businesses where they were actually operating like buy now, pay later type platforms for small businesses, but the funding's coming from DeFi.
Amazing. Yeah.
And but on the consumer end, they don't know that the funding's coming from DeFi.
Yeah.
And so I think DeFi is just going to continue to grow, and I think the property market um, could capture a lot of that value, and I think property prices could potentially go up because now you've got alternative forms of debt financing. Um, so if you've got a property development project, for example, you can tokenize the piece of land onto an SPV, and then if you can't get tier one or tier two lending,
Mm.
you can tap into DeFi, still complete the project. So I think it'll create more efficient markets.
Mm. Yeah. That we're just talking hypothetically. This is actually where this is probably going to go, right? At some stage.
Yeah, I think so.
Mm.
I think it's just a matter of time because I think regulation has always tried to protect consumers. Sometimes it stifles innovation, but the rate of innovation right now is growing too fast.
Yeah.
And
It's reached almost like a terminal velocity, or not, the opposite, escape velocity, right? Where it's almost escaping the pace at which regulators can chase it. And I don't mean that in a bad way, but just it's just moving so fast, right?
yeah, exactly. Like think of us as living on a hockey stick right now, and yeah, the pace of change is just getting faster and faster.
Mm.
And so I think DeFi capital markets will continue to grow,
Mm.
whether we're in a bull market or bear market in crypto land.
Mm-hmm.
And I think it'll be really good for our capital markets, whether
Mm.
it's property or the stock market, because
Mm.
now we can right size risk, and you're not just relying on a few banks or a few lenders. You can kind of democratize the decision making through DeFi protocols.
And use maths instead of centralized authorities that set policy using levers that have massive delays, specifically the OCR and all that sort of stuff. But I'm thinking about this at a micro level as well, like in the context of intergenerational wealth transfer within a family. Quite often there will be parents or older parents, perhaps they're retired, but they're living in a property which is worth millions of dollars, and they can't afford the council taxes. They can't afford maintenance on the property, and they can't afford to live
Mm.
because they are your stereotypical asset rich but cash poor people. Often they'll have kids which have the inverse problem. They don't have any assets yet, but they're in the workforce and they're earning great money. So you have this amazing trade set up within the family unit where one generation has the income that the older generation has, who has the assets that the younger generation strives for. So do you see a situation where tokenized property ownership could create almost like this family economy, which transitions ownership of these assets gradually through time?
Yeah, I think so. I love that. I love that analogy, and I should probably maybe preface that tokenized property. We have to think about whether the property is a rental property
Sure.
or it's owner occupied.
Yeah.
And owner occupied, I think that's a great scenario of a great use case for tokenized property, because if you're, let's say, grandparents living in a beautiful home that's tokenized, you could slowly sell down some of your property to your family members
Yep.
and in exchange for cash. and then you because it's all on blockchain, and you can use smart contracts. You can program things,
Mm,
so if unfortunately they pass away, then they can even allocate what each family member gets
yeah.
percentage wise in that piece of property.
Yeah. How far away is it, do you think, that we'll see traditional mortgages being swallowed up by lending that's happening on DeFi protocols?
If I had to guess, it would be 15 years, just off the
Sure.
top of my head,
Yeah.
um, just because I think they can act kind of cohesively and complementary.
Mm,
Um, so if someone can't access TradeFi lending, then they can tap into DeFi,
mm,
um, and then I think eventually you'll have TradeFi lending, maybe even tapping into DeFi lending
mm,
themselves for their own funding.
mm.
um, so I think it'll be something like 15 years.
Yeah.
And I think the regulation, because globally there's more regulation for crypto crystallizing, and I think the regulation piece is probably the last big hurdle for us to really legitimize whether it's crypto or DeFi, and then that'll be what's unlocking real mass adoption.
Wow. So, say 10 to 15 years' time, you might see banks who are the originators and distributors of the money now that might transform to where they're kind of like a broker or a middleman, and they're actually using the DeFi protocols themselves as the funding mechanism, and they're just putting their wrapper around it just because people will take time to get used to this concept. But there'll probably be a growing market where individuals start to do the digging themselves and figure out, actually, we can do this ourselves now, right?
I, yeah, that's the potential, like
Yeah.
especially with blockchain where it tends to disintermediate
Yeah.
industries.
Yeah.
That's the risk, I think,
Yes.
for banks. And I mean, don't get me wrong, banks play a really important role in our economy. They're trusted bastions for finance. But I think where the economy is heading, we're becoming more digitized. And when you look at the impact of blockchain and DeFi, when you look at open banking, for example, banks are at risk of losing the customer relationship, and they're at risk of just being more of an infrastructure
Mm,
player in the industry. And then you've got platforms on top of them like open banking or crypto exchanges
yes.
or DeFi protocols, which have the actual customer relationship.
Like, they're the copper lines to the broadband example, right? Like, the infrastructure was set up potentially for voice calls back in the days, but now you can just move data down through the same network. So the traditional financial infrastructure might still exist, but it might be used in a completely different way. Is that kind of what you're saying?
Yeah, exactly.
Okay, so we've when we talk about the metaverse, I remember in the last bull run, I probably got in way too late in terms of the NFT craze, and when I got in, it was really just for education only. I think I still own one NFT on the. I have a Phantom wallet. It was a Solana NFT, right? And that's all I have is a tree, a pixelated tree. That's my claim to fame. That's all I have. And so I'm not super like jazzed about art, digital monkey faces and stuff like that. Just don't turn me on for some reason. But the metaverse as a concept, I personally don't think it's going away. And I know you'll probably have some views on this. Uh, a lot of people do believe it's going away, though. And I think this is typical with most of the Web3 crypto space. People kind of think that it's a fad that just won't go away. And then they just assume it does when they don't hear about it. But it's coming in waves, right? And so when we talk about the metaverse in your world, what do you think? Do you think the metaverse is a real thing? Maybe the branding isn't quite right yet, but do you think it's a real thing to start with?
Yeah, I think the metaverse is a real thing. We already have early metaverses right now. Like, when I was growing up, I used to play Grand Theft Auto, which was
Yeah.
free play, which is a free play game. You can free roam, and that's like early metaverse. You could
Mm,
see kind of product placement from some brands randomly pop up during the game, and then you've got early metaverses now, like Roblox, Fortnite, where you've got product placement from brands.
mm,
You've got a concert like Travis Scott had
mm.
his own concert
That's
on
right.
Fortnite. And then you've even got brands having permanent stores in some of these digital platforms.
Mm,
And so I think the metaverse is already here in a way. And I think as the technology improves, particularly AR, VR device technology, then I think that'll be what leads to mass adoption.
Is it still evolving actively? Is it speeding up? Is it going to be a situation where it just all of a sudden it's there and everybody just realizes it one day?
I mean, I have to get my wife's permission, but I'm happy to bet the house
Yeah.
that we'll be using, like, we'll have mass adoption of metaverses. Because I think when you think about media, and you think about user attention and engagement, media tends to follow where attention and engagement is. So,
Mm,
like our parents, they would consume media on radio and TV frequencies, whereas you and I, we consume our media on through the internet using mobile devices, smart TVs. I think our kids will be consuming their media again through the internet, but using AR, VR devices.
mm,
And I think where media is, that's where brands play. That's where they follow because they want to capture user attention and engagement.
mm.
And so I think the metaverse is just an evolution of online gaming and social media and social commerce
Right.
where you right now, in order for you to buy, like Lululemon products,
Mm,
you see an ad of Lululemon on TikTok, and then you decide, I want to buy some Lululemon. So you go on the Lululemon, you click on the link to
mm,
the Lululemon website, and then you can purchase some product directly from the website.
mm.
So I think it's just an evolution of that, where you'll have metaverses where pretty much the brand recognition, the brand presence, and the e-commerce aspect is all bundled up into one environment
Mm.
where you can be in the metaverse. You see the Nike store there, and then you can actually buy real world Nike products
Yeah.
in the Nike metaverse store.
Yeah. But I guess the interesting thing here is that we have three things: media, gaming, and commerce, right? And if we think about the the family unit, we're going to be engaged on at least one of those areas, right? We're either going to be engaged with media or with gaming, thinking about my kids who are totally into Fortnite and all that sort of stuff, or commerce, right? We just have to buy stuff. And so it's like this funnel that we're all being herded towards, and it's being prepared, but most of us aren't there yet, right? But we are being corralled into this metaverse concept, whether we like it or not. We might not necessarily need to appreciate that it is the metaverse, but what would we expect the form to look like? Are we going to be like in the metaverse when we're just watching TV, for example? Like, how is this going to look in reality?
My guess is it'll be a combination of the movie Ready Player One,
Right.
if you've watched that, but also a mixture of have you watched Minority Report?
Yes.
Tom
Yeah. Yeah.
Cruise,
Pre-crimes. Yeah.
right?
Yeah.
And they're using augmented reality. And then Ready Player One, they're using virtual reality,
Hmm.
and it's just the immersion of the two. And that exists now. It's called mixed reality
Right.
(XR).
Right. So XR is like AR and VR, augmented and virtual reality combined.
Exactly.
Right.
And then really all media is doing there is it's buying real estate, and the real estate is either an augmented reality in the real
Mm,
world, and you can see the media through AR devices, or it could be real estate on the Ready Player One environment where you've got digital real estate,
mm,
and companies can pay for advertising space
mm.
in these environments.
Right. And so when we see booms and busts with each cycle of adoption that happens when these technological waves kind of crash on us, I'm thinking of things like, let's say you bought some virtual real estate on one of these metaverse spaces. If that doesn't actually pan out to have a large enough network who adopts that, then that's the risk that you have, right? That no one is actually building in that space. Like, how do you know where the next thing is going to be? Because you mentioned that media follows engagement, and then shortly afterwards, presumably brands follow that. But how do we know where the engagement is? Where is the attention right now in this metaverse place?
That's like $1 trillion question,
Right.
and it's kind of like you and I grew up with Friendster and MySpace, and then it became Facebook, and Instagram, and now it's TikTok. Sometimes there's an element of randomness
Yeah.
to what becomes viral, but I think there'll be a viral platform, metaverse platform, and it'll just so happen to be like the winner of the metaverse game. But I mean, that said, I think we'll have multiple metaverses, so I think
Mm,
it won't be a winner take all type
right.
type game.
Okay. And so, and again, like there's where the opportunity is because there'll be oracles or bridges or connectors where these metaverses probably sit in different areas, kind of like social media. You might jump on your X account and then it's off to Meta, but maybe it's more seamless, right? You bring your digital identity to another platform and everything is seamless. Is that kind of what to expect?
I think that'll happen because I think open source technology always tends to win,
Right.
and I think interoperability will be what we'll see in the metaverse. So yeah, exactly. I love you bringing up digital identity because
Mm,
digital identity is probably key to us really unlocking the digital economy.
mm,
So when we have digital identity, it takes away a lot of the frictions of manual KYC, for example, and then we can replace because right now our digital identity is really just our email address that we use when we log into our Facebook account, for example.
yeah.
So if we have real digital identity, then we can really transact digitally because now you've got real stakes in the digital economy.
Mm,
And so I think interoperable metaverse is probably what's going to win because, um, yeah, I don't think there'll be one king in the metaverse game. And so I think all the metaverses will be incentivized to focus on specific use cases.
right.
So, there'll be, you have one metaverse that's probably going to be corporate focused and business meeting oriented. You'll have pure entertainment focused metaverses. And I think if they're interoperable, I think they're probably going to win versus closed loop systems.
Yeah. And you can kind of see how this could work, right? Like right now, you might have your LinkedIn account. Uh, you might have your X account for when you want to argue with people, and you might just jump on YouTube or go on Spotify to listen to some podcasts or audiobooks or watch a video or whatever it is. But what is consistent is you, the person, interacting with these platforms. So at some stage, there has to be something that's kind of almost fused to us so that when we're putting on the AR headset or whatever it is that we're doing in one of these metaverse platforms, regardless of how we interact with it, it has to be a consistent, seamless experience where we're live, kind of like connecting your wallet. So if you yourself were the digital asset, you would connect your wallet or yourself to that metaverse, wouldn't you? And it would just be all on, right? Is that the idea?
Yeah, I think so. I think that's a really good description. And your digital identity could be linked to your digital wallet, for example.
Yeah.
And then, yeah, pretty much when you tap into different metaverse environments, you just plug in your wallet into that environment,
Yeah.
and then that environment knows that it's Darcy Youngero
Yeah. That's cool.
interacting there.
Yeah, that's cool. Because I think even just like having this discussion with you, I've had a few camera problems, right? And so it's a bit annoying, but I think maybe even in the future it'll be kind of like that'll be seamless because the technology, the Internet of Things around us is constantly adapting to where we are and what we're doing. So if we are interacting in a metaverse, maybe the cameras that already exist in our fridge, in our toaster, and in our computer and our smartphone, it's probably they're all working to create that imagery of you that's required to put you into that metaverse that you're in. But you always have to consistently prove who you are, right?
It kind of reminds me of the movie Truman Show,
Yeah,
if
yeah,
you've
yeah,
ever seen that.
yeah, yeah,
But yeah, absolutely, that could be, how people are creating content on the metaverse, for example, using IoT.
yeah.
That's also how they could be interacting with the metaverse through IoT.
Yes,
Um, and then, yeah, I mean, I can see myself maybe as an older guy in the metaverse watching a movie with my son who's probably let's say he's in the Philippines
yeah,
hypothetically, but we're watching the same movie
yeah.
but in a digital environment together.
And I think just as entertainment, I was learning a little bit about the Sphere. That that massive venue which has that 360 degree screen around it, these tiny little hockey pucks that project images on the outside and on the inside. So it's this full on immersive experience when you go to a concert in Las Vegas, I think it is. And I just wonder, like, that would be the equivalent of going back into the late 70s, early 80s, dropping acid, going to Grateful Dead, like that would be fully into it in that way. But I just wonder if in the future, the way that we entertain ourselves is way more immersive than what it is now.
Yeah, I think so. That would be amazing. I mean, imagine Taylor Swift, right? Like Taylor
Mm,
Swift sold out five five shows in Singapore.
yeah,
So that's like so many people missing out right there. But imagine if you could consume a Taylor Swift concert on the metaverse like
yeah,
you're there in real life.
yeah,
I mean, that it's a win for the consumer because now they don't miss out.
yeah,
It's also a win for the artists because now they've just grown their market.
yeah. The distance or the distance between you and that source, like Taylor Swift, just becomes, it vanishes. And no one can get any closer than that, but everyone can get closer at the same time. I think it's just that's fascinating. So let's talk about tokenized AI agents because I think this is really interesting. Playing around with ChatGPT and all the other tools, like I think a lot of people have this year. One of the most fascinating ones was being able to create an agent that goes out and can do a set of tasks to achieve the outcome that you want, like create an itinerary for me and make some bookings. Like that's pretty amazing, but that's where we're at right now. So what does that look like when we infuse artificial intelligence and when we tokenize it on a blockchain?
With AI, for example, like AI agents, where I see that going is if you ever watched Rick and Morty, there's an episode where Rick and Morty and the entire family they create copies of themselves, so that when they're asleep, their copies are awake
Yeah.
and they've got 24/7 productivity.
Mm,
I see AI agents being something like that, where I can train an AI to resemble my thinking process and decision making process. So if I'm asleep or on holiday, it could still be making decisions for me.
mhm,
And when you plug that into digital identity, all of a sudden that AI agent could be signing contracts or negotiating contracts on my behalf, and that just explodes productivity.
mm,
And where tokenized AI is right now we're at the early stages of tokenized AI. And there's a company that I've worked with called Alter State Machine.
mm,
They have essentially tokenized many versions of ChatGPT, and they're generative AI technology, and you could train up the AI code so that it can, help you play video games, for example. And then you can then, because it's tokenized on the blockchain, you can transfer ownership of those AI agents to someone else.
right.
And so it's combining tokenization on blockchain and AI, generative AI.
So it's a new form of personal leverage, isn't it?
Exactly.
I like this because one of the side projects that I've been working on for a while is an app that effectively unlocks personal value. Like all the data that we have, instead of giving it away for free and other people make money, we benefit from it. But how do we benefit from it? Well, you train AI agents to go out there and basically do deals on your behalf. So it's like this purest form of personal leverage, isn't it? You're multiplying yourself, giving it authority. And I guess where's the limit with that though? Because can we just control, copy, paste ourselves like a billion times, send it loose? It's not going to be that simple, is it? Like, where's the limit to that?
We're in the hockey stick, and I suspect eventually governments will try and regulate how we use AI
Mm,
and how people produce AI products, base products. But until we get that regulation, I think, yeah, the genie's out of the bottle, and we
yeah.
can definitely see that happening.
Yeah. And this is why it's so interesting. Like, it's good that we're having this conversation because thinking about the future, we think linearly when we look backwards and assume it's going to be linear going forward. But it's more than just a hockey stick going forward. It's a hockey stick in multiple dimensions when we talk about AI. And so when we think about wealth, this is the part that gives me hope, knowing that a lot of people, they feel locked out, they feel like their parents have it all and they don't have an opportunity. I think we've completely got this wrong. I think the greatest times of wealth is ahead because this unlocks so much more value. We won't even know what to do with it.
I think, for example, robo advice, we
Mm,
don't really have robo advice here.
mm,
And part of it is the risk averse nature of TradeFi here
mm,
in New Zealand. But yeah, you could theoretically, Darcy could train an AI agent to, think and process information like Darcy
mm,
and then give advice
mm,
on Darcy's behalf.
mm,
There's regulatory issues for that, for example, like, does that fall within your FAP license?
mm,
Um, but I think that's how you could leverage your time and your expertise through AI agents.
mm,
You could also use AI agents in the production process of your business. So you could use it to, help you find the best ETF for your
mm,
client
mm,
through advanced analytics. So
yeah.
there's you can use it both in the production process, but also the delivery
Mm.
delivery process.
And I guess this is the interesting part where regulation obviously has an impact as well, because robo advice and regulation is often, correct me if I'm wrong, but it is very product centric, and it's about the delivery and whether or not that's appropriate for the client that you're advising on. So when it comes to a more of an abstract form of advice where you're basically helping someone navigate a financial decision that they need to make, that's where it gets really interesting for me, because I have notes for Africa around what kind of advice I have delivered in the past to clients. If that was obviously scrubbed from, like, all the personal details of people was scrubbed, and it was just my response to the themes that people presented to me with, and then that was used to train an AI model, then I'm leveraging not just the scientific and analytical aspects of giving financial advice. I'm leveraging my own ability to give what is uniquely me to people. And that's just my version. But I guess if you were a doctor, a counselor, I would imagine this would be very important. Um, a judge, like, there's so many areas where you could take that and remove it from the actual analytical part, but put it more on the human side with AI, right? Discretion.
Yeah, absolutely. And you could have, you could multiply the best financial advisor in New Zealand because now you could
Yeah.
replicate their thought process using AI.
Yeah.
And the same for the best doctor in New Zealand, the best judge.
Yes.
Um, yeah, absolutely.
Is this a new type of capitalism then, where we create our human capital, but it becomes AI and we license it out?
I haven't thought of that. I like that idea. I think can, yeah, when you're thinking about licensing, you can definitely find ways to do that through AI, especially if you could either license it or you could sell it because you just tokenized it on the blockchain,
Yeah, yeah,
and you could replicate yourself. You can replicate yourself like 10,000 times, and each time it's tokenized, and you could
yeah.
sell each token for a tidy profit.
So someone is in the metaverse, they have their digital ID plugged in, which contains a really accurate picture of who they are in every aspect. It then engages uh, a financial advisor who has leveraged themselves by tokenizing an autonomous AI agent of themselves. And it effectively is removed from us, isn't it? Like, these are interacting together, and then that value that unlocks gets delivered back to the consumer and the producer of that. Is that kind of like the picture of the economy that starts to happen?
Yeah, it could shape that way, especially as generative AI improves.
Yeah.
Um, I think about like the leverage model for a law firm, for example, where you have a partner, and then they have a team of junior
Mm,
lawyers, and each junior lawyer is essentially an extension of the partner in a way,
mm,
and the partner leverages their junior lawyer's time to try and deliver work more efficiently for clients,
yes.
but also service more clients.
Yes.
Um, Imagine if you, unfortunately, replace the junior lawyer with an AI agent, and now the partner has replicated the best aspects of themselves as an AI agent, and they can now leverage themselves almost infinitely
Mm,
because the AI agent doesn't need to sleep, doesn't
mm,
need to take breaks,
mm,
and it can work 24/7.
mm.
Is that what you're thinking?
That's exactly what I'm thinking. And this is where it gets quite fascinating, just from societal level. And everybody's, I guess, justifiably slightly concerned about being replaced by the machines, right? And this is one of the reasons why. But when I look at this as a business owner myself, I see this as an amazing way to scale a business without having to deal with labor and all the issues that that presents, which is like the biggest pain in the backside for business owners, but also the greatest joy because you're doing something good in people's families because you're employing them, right? So there's good and bad around this. And I think most employers would jump on the opportunity to make their workforce redundant if they could replace them by robots. Would that be fair?
Uh, I guess yeah. If
Would it be ethical? No, but would it be fair? Yeah, it would. They probably would, right?
taking away the human element, I think
Yeah,
they would. If it was a pure business decision, yeah.
yeah. It's sad, but it's true. But when we think about what makes us unique, what makes us human, what makes us valuable as people, it's usually not the medial tasks that we do. It's the thing that goes higher up into our purpose, right? What makes us human. And I think if we all got better at doing that, we don't have anything to worry about in terms of being replaced, really. But it's pretty scary. Like I know that technology is quickly replacing a lot of the things that I do, but at the same time, it's also meaning that I can do way more without having to employ people to do it. So it's quite a fascinating space, but it all means that we can go higher up the value chain. And if we all go higher up the value chain, then we can unlock more value, which again creates more wealth. So it's good.
Yeah, I think so. And I mean, I guess the question is like professions like the law profession where it's kind of like an apprenticeship.
Sure.
Like for someone to reach partnership level and reach that level of expertise, it takes several years. And with AI, you could potentially create donuts where you've got, the profession gets older and older and through AI, and you don't have new lawyers reaching partnership level because no one's training them.
Mm,
There is that risk. But I think in terms of AI, I think it'll just mean that people find other professions. I don't think AI will necessarily fully replace people. It just means people are finding other professions.
sure. So let's finish up now and talk a little bit more about what you've directly been involved with because you've been involved with some pretty cool things. And maybe we can start off by just telling me a little bit about Futureverse and your involvement with them and just tell me everything you possibly can about that because I find that quite interesting.
Futureverse, they're one of the world's leading open metaverse projects, founded here in New Zealand by Kiwi founders, and they raised over 50 million bucks earlier this year. I was their legal advisor through the process. They raised the money from Ripple Labs, which is
Mm,
a global blockchain company,
mm,
and 10T, which is a well-known VC fund.
mhm,
And what Futureverse is doing is they're creating their own content, their own games, but also they're creating the picks and shovels for other companies to build their own NFT metaverse type projects.
mm,
So they have their own blockchain called the Root Network. They have built a game in partnership with FIFA,
mm,
which is a mobile app game using AI as well. Your character is actually trained by AI, and then the people you're playing against, they're also using AI, and they've also created some of their own content, like Fluff World, for example,
mm.
which is a popular NFT collection. And so I think they're solving a lot of important use cases currently in Web two, and I think they're building the building blocks for Web three.
Interesting. And thinking about this from an investor's perspective, it's possible to own NFTs. It's possible to own crypto assets. Then you mentioned the picks and shovels approach, where maybe you either get involved with or you invest in companies that are building out the infrastructure. But what are some of the ways that, yeah, everyday investors could be participating with this move towards Web3? What should we be thinking about?
Yeah, Web3 companies, they're launching new crypto based products. So, it could be a new NFT collection, and those collections will have secondary markets. They could be, launching new crypto tokens like fungible tokens. And yeah, those tokens will have secondary markets.
Mm,
And you could, theoretically buy them on Easy Crypto or Binance. I think also if you're a wholesale investor, then some of these Web3 companies raise venture capital
mm,
and you could invest directly in the company.
mm.
Um,
On that in particular, Brian, like where would one go if you were a wholesale investor and you wanted to just get some exposure to this space in terms of New Zealand based companies to start with? Like where would you go? How would you network to find out about these opportunities?
I work with a lot of Web3 companies.
Yeah.
Some of them are raising capital, so they can go to me, for example, and I can make an introduction.
Yeah.
There's also Blockchain New Zealand, which I'm on the council of,
Mm,
which is an industry body, completely independent,
mm,
and it's got around 100 members.
mm,
Some of them are in Web3, some of them are TradeFi, some of them are banks, and together we facilitate the Web3 and blockchain community.
yeah,
And yeah, joining Blockchain New Zealand could be another option.
definitely. Yeah, recommend that. And also listening to the Blockchain NZ podcast, correct?
You could listen to the Blockchain NZ podcast,
Yeah,
which I co founded with Jeff Nicey.
yeah.
Hi, Jeff. And also follow your podcast.
Oh, thank you very much. Well, we're following it right now, so that's easy. That's by default, right? That's cool because I think that there is a lot in store for people who are kind of early, but view it as early. You don't want to be speculating in this place, in my mind, anyway, because you're probably going to get your face ripped off. So you got to be kind of careful and considerate and strategic with how you allocate to this space. And a lot of what we were just talking about before, that's for wholesale accredited investors. So it's not necessarily a retail option, but for a lot of everyday Kiwis that aren't in that space, then like you say, be aware of what's happening in the NFT space because it isn't necessarily going away, is it? It's just evolving. Same thing with the crypto assets. That's not going anywhere either, right? So it's just being aware of it, soaking yourself in it. It's not a fringe speculative asset class. It's high risk, but it's just early. It's an early picture of what the future could be, right?
Yeah, 100%. I mean, my thesis since 2016 is every person in the world will eventually have some exposure
Yeah.
to crypto assets, whether directly or indirectly through their KiwiSaver fund, for example,
Yeah.
or a venture capital fund that they invest in. And definitely only allocate a small portion of your entire portfolio on these types of assets, not financial advice.
Yeah.
But definitely NFTs won't go away because NFTs have been used by world class brands as a way to create new revenue streams for
Mm.
their IP.
Mm.
Like there's a New Zealand company called VV Digital Collectibles, for example, which I'm their legal advisor of. And they've pretty much digitized $1 billion physical collectibles industry. Think digital statues, think comic books. Now imagine if those are in augmented reality and tokenized as NFTs.
That's
Yeah.
awesome. Well, we've covered a lot of ground, tons of ground. So hopefully people have been following along. I think even if you just caught 20% of what we're talking about, it's amazing, right? Because there's so much going on in here. If you want to follow you, Bryan, apart from the Blockchain NZ podcast, where else could they see what you put out? Are you active on social medias that you want to share your Twitter handle? Do we call it that these days?
Yeah, happy to share my Twitter. I'm there at Bryan Ventura NZ, or you could check me out on LinkedIn, Bryan Ventura.
Yeah. Bryan
Yeah,
with a Y.
Bryan with a Y.
Cool. Awesome. Well, thanks very much, Bryan. Appreciate the chat today.
Thanks, Darcy.
Cool.